To the U.S. West Stock Index futures pointed to a marginally lower open today after U.S. President Donald Trump unveiled a massive overhaul to the tax system. Trump announced the biggest tax reform for the U.S. in 30 years on Wednesday, proposing tax cuts for most citizens. However, the plan received some criticism for favoring the wealthier and raised doubts over its impact on the country's deficit. U.S. bond yields jumped on the news and the dollar rose too. Investors will be watching out for fresh data releases with jobless claims out at 8:30 a.m. Eastern Time. There will also be revised GDP figures for the second quarter of the year, and international trade in goods numbers also are out at 8:30 a.m. And those futures numbers there looking all red. To Asia now. Indices there closed mixed after the U.S. equities advanced and the greenback rose following the unveiling of a long-awaited tax reform plan stateside. The Nikkei 225 added 0.47 as most financials and manufacturing names notched gains. Across the Korean Strait, the Kospi edged up 0.02%. The Australian ASX 200 rose 0.11%. Hong Kong's Hang Seng Index was under pressure, falling 0.41%. Mainland markets only saw moderate moves. The Shanghai Composite shared 0.15% and the Shenzhen Composite eased 0.227%. Away from the markets and back here in Africa, rating agency Fitch has warned that South Africa's economic growth will be significantly hampered by increasing political uncertainty in the run-up to the ruling African National Congress leadership contest in December. In a report released by its BMI research arm, Fitch said a turn to more radical rhetoric and policy positions by the traditionalist wing of the party would weigh on investor confidence. According to the report, mining and manufacturing activities are likely to be hit especially hard by the political challenges as the elevated policy uncertainty stymies much-needed investment. In the meantime, Moody's said on Wednesday South Africa's credit rating is well placed at the lowest investment grade, but rising foreign ownership of the government's local currency bonds is a risk. The continent's most industrialized economy contracted in the last quarter of 2016 and the first of 2017 before recording marginal growth in the second quarter. Average expansion is forecast around 1% for the next 3 years. In Ghana, the gross domestic product was 9% in the second quarter of 2017 compared to 6.6% in the previous 3 months. For years, Ghana's economy grew at around 8% per year, but it slowed sharply in 2014 owing to lower prices for its commodity exports and a fiscal crisis that forced the government to sign a $918 million credit program with the International Monetary Fund. The Statistics Office says, however, the growth figure is subject to revision. And Namibia has cut its 2017 economic growth forecast after slipping into a technical recession in the second quarter. The economy is now expected to grow by between 1.8% and 2.3% in 2017, down from an initial estimate of 2.5%. The statistics agency said last week the economy had shrunk by 1.7% in the second quarter, the same contraction as in the first quarter. The projected 2017 growth is expected led by a recovery in agriculture after a drought last year and an expansion in the mining sector. Growth in mining is mainly a result of increased production of uranium following the commissioning of the Husab mine, expected to become the second biggest uranium mine in the world. We start off this segment with commodities matters, beginning in Tanzania, where Petrol Diamonds Limited says it has received authorization from the government there to resume diamond exports and sales from the Williamson mine in Tanzania. The company, however, said the exact timing and process for the next diamond export to the company's office in Antwerp and sale will be finalized between the company and the government. In the meantime, no resolution had been reached over the 71,654.45 carat shipment from the Williamson mine that was blocked for export earlier this month. And to global precious metal market, gold rose today after falling to one-month lows on expectations of a rise in U.S. interest rates this year, while platinum fell to a discount against palladium for the first time since 2001 on waning demand for diesel cars. Spot gold rose 0.3% to $1,284 per ounce after it revisited the previous session's low of $1,280 an ounce, the lowest since August 25. U.S. gold futures for December delivery fell 0.1% to $1,287 per ounce. Palladium hit price parity with its better-known sister metal platinum on Wednesday for the first time since 2001 as demand expectations for the two assets diverge. At global oil market, prices fell today with U.S. crude giving up some of the previous session's gains that were driven by surprise fall in inventories, while Brent moved further away from recent 26-month highs. U.S. West Texas Intermediate crude dipped 7 cents to $52.06 a barrel after rising 26 cents in the previous session to just below 5-month highs. Brent was down 11 cents at $57.79 a barrel, slipping further away from Tuesday's more than two-year high of $59.49 following a near 1% fall in the previous session.